Hello viewers, this is Swati Verma from ETMarkets.com. In a shocking move, Sebi today banned 331 shell companies from trading on the bourses. We have with us Amit Tandon, MD at Institutional Investor Advisory Services, to tell us what shell companies are and what does he think of the regulator's move.
The first is the question is, what are shell companies? Now, this is not something which is defined anywhere in the Companies Act, but it's something which is understood in common parlance. Now, what people typically associate shell companies with are companies which have been actually compliant with all the rules and regulations. And this is a very important distinction between shell companies and dormant companies. Dormant companies would be those which have not been compliant, have not been filing regularly with the stock exchanges, and therefore you don't know whether they exist or not. Now, these shell companies do exist. They have been complying with all the legal and regulatory formalities, and periodically they might be used to put through certain transactions. It could be an M&A transaction, it could be something else. And unfortunately, in the case of these 331 companies today, it seems to me that they were used for, at the time of demonetization, for deposit of a lot of cash into the bank accounts. We need to find out a little bit more about the specific charges, of course. On the other question in terms of how do we view this whole thing, now look on what has been going on, I think I'll kind of put it into a couple of parts. The first is the fact that it's 331 companies. Given the fact that you have a listed universe of about 5,000 odd companies, it's a fairly sizable number. Suddenly you turn around and say that 6 or 7% of the companies are being delisted or cannot be traded, moved to where they're traded once a month. That's one aspect of it, which is the suddenness of this and the size of this is something which has actually shocked the various market participants. The other aspect, of course, is how do we view it? Now, I would say that I don't think anyone is going to argue about the fact that if companies have been indulging in illegal trade, then the consequences have to be severe. That, of course, everyone agrees with. I think what has happened in this case is the regulators, that is SEBI and the stock exchanges, have thrown the baby away with the bathwater, which is to say that there are a number of companies which might have been used for legitimizing some cash transactions. But in the process, there have been about 8, 10, 12 companies which have genuine operations, which have genuine investors and who have been actually been a part of this circular, and therefore their trading has been banned or at least restricted to once a month. And that is what is causing the market some degree of concern and anxiety. That is the aspect which needs to be addressed. So how is it that these 10 odd companies who have genuine operations, what is the recourse available to them, and how quickly is it possible for them to go to SEBI and ask for a rectification so that the trading resumes and the small shareholders don't suffer as a consequence of the SEBI circular. I think that's these are the two things in a nutshell.